Good afternoon, everyone. Welcome to this webinar on Program on Understanding and Implementing the GRC. Thank you so much, everyone, participants, for joining in. We've got our learned faculty today, CA Piyush Chaturvedi ji, who will be guiding us and giving his insights. Thank you so much for accepting this invitation, sir, on behalf of WRC. And we've got CA Maitri Cheda, who is going to coordinate this session. Thank you, Maitri, for agreeing to be a part of this session and helping us always. Before we actually begin, I'll request everyone to kindly place your hand on your heart for the ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you so much, everyone. Thank you, our coordinators at the WRC. So, everyone, as we are nearing to the fag end of completing our tenure of, at WRC of 24-25 under the chairmanship of C. Ankit Rathi, we welcome all of you to this upcoming year as well. And please be a part of a lot of seminars and sessions happening. We have CA Vratika Jain also has joined us and who will be also a part of coordinating team. Thank you, Vratika, for being a part of coordination team. Before we move ahead, I'll request CA Maitri Cheda to kindly introduce our speaker for the day.
Thank you, Rudeshji. It is a great honor to introduce CA Piyush Chaturvedi. He is a CA in practice with over 26 years of strategic and operational experience in governance, risk management, compliance, and risk-based internal audit. Currently, he is partner and head of operations Western region with SCV and Company, LLP Chartered Accountants. It's a firm which is amongst top 20 Indian CA firms. He has worked across wide range of clients in India, Middle East, and Africa in various industries: alcoholic beverages, manufacturing, hospitality, auto, healthcare, textile, real estate, construction, retail, ITES, and airlines. Prior to this, he has worked in both industry and consulting. Some of the organizations that he has worked with are EY, KPMG, Protiviti, Sutherland Global, Qatar Airways. He's also trained in delivery standardization and Six Sigma with a green belt. So this is his professional qualification, and I'm sure it's a very short one. One more interesting thing about Piyush is that he's an amateur poet, writer, and singer. So that's something which is very interesting. So with that, I will hand it over back to you.
Sure. Thank you, Maitriji, for that excellent introduction and letting us know about Piyushji. I think before taking much time, anytime, I think Piyushji, are you ready?
Yes,
Yes.
absolutely.
Thank you so much. And Piyushji, over to you.
Thank you. Thanks, Maitri, for that introduction. I'll just share the presentation now. Is the screen visible?
Yes, sir.
Perfect. So, good afternoon, everyone. And first of all, thank you very much for sparing time on a Saturday, being a weekend. So, I see that there are about 15 participants, and I'm sure it will kind of increase as we go along. So, what you see today, the topic for today is governance, risk management, and compliance. So, it's like ESG, it is also kind of a buzzword which has been doing the rounds for quite some time. There was some glitch, technical glitch.
Okay.
My
Sir, any help?
screen went off a bit.
So we are able to view your screen.
All
Are
right,
you
all
able
right.
to move the slides?
Yeah, that's precisely what I was trying to do, but then there was some difficulty in doing that.
Maybe you want to, restart sharing. I mean, stop and start again.
Yeah, maybe. My sincere apologies to everyone for this technical glitch. Is it okay?
We are able to view your screen. Maybe you want
Okay.
to change the slides and check.
Yeah, that's precisely what earlier I was trying to do that. There's some problem over here.
So maybe you could open in the earlier format only in case if this is not opening.
Hmm. Maybe.
So you'll have to probably share the screen instead of just one particular file. Then you'll be able to move it along. Because when
Okay.
you just share the file,
Only
PowerPoint
the
opens in two formats. So that's why
correct.
you're not
Okay.
able to move it.
So I have shared the screen now.
Now you'll be able to move. Check.
No, I can't.
Okay, so maybe then you can open the PDF that you had opened earlier.
Yeah, just a moment. Just give me a minute. I think I've figured out what's the problem. Yep, here it is. Is it moving?
Yes.
Perfect, perfect. Yeah. So sorry for that little glitch here. So what I was saying was that GRC thing has been doing the rounds for quite some time. Uh, People generally draw kind of not don't really recognize this subject as such. Although whosoever is present in this forum definitely knows individually all about all these three components. Another thing is that when you read about startups ecosystem and MSMEs, for example, I mean, ICI has done a great job in terms of MSME awareness and the MSME Yatra. And there's a lot of practicing CAs who are into startup support ecosystem. One thing we definitely hear is about governance in startups. And what generally happens, like I've also been associated with quite a lot of startups. Now, one thing which really bothers, or one which really comes out clearly, is that there's an idea, you get a fund, and then everybody starts running towards the top line or the valuation part of it. So it's all about how do I earn revenues, and I'm telling you this as practical scenarios because there are certain assignments that we are doing currently on the ground where these are the typical scenarios. The organization has been operating for almost, let's say, for example, 5 years, 7 years, but still there has been a lot of problems in their governance and the lack of reliability on numbers, which largely is because of the weak governance which is there in the organization. So whether the organization is small or big, governance is very, very important. Now, you must be wondering what governance is a very large word. And it can be bifurcated into two parts. One is called corporate governance, and one is called operational governance. This corporate governance also is lot talked about. There has been 3 reports on corporate governance in the corporate history. We will see that. What I'm trying to do right now is just kind of set the context for this particular discourse. So corporate governance is there, which is largely related to the owners, the boards, the shareholders, and the people who are kind of running the organization. And then there's operational governance, that is CEO and his team. So if you, I'll take you back in time when we used to study management in college days, or maybe in CA also. there's something called dichotomy of ownership from management. This is one concept. So when the ownership and management, there's a dichotomy, when the organization grows larger, there is a great importance of governance where roles, responsibilities, span of control, segregation of duties, controls, all these have to be put in place because ownership is distinct from management, and there is a clear roles and responsibilities and accountabilities which are to be set. So all these are part of operational governance. Now, governance happens at many levels and in many forms and in many organizations. Say, for example, there is a governance in everybody's family also. There's something called family discipline. Then there is governance at a city level. There's a governance at a district level. There's governance in villages in terms of panchayat. There's governance in terms of a city, in terms of municipality. There's governance in terms of state, which is the state legislature, and then the country in terms of your parliament, and the world in terms of United Nations, or say, for example, European Union, which is the European Union Parliament, apart over and above the individual parliaments which are there in the country. So similarly, you have the constitution of a firm, constitution of any business organization, be it a sole proprietor, be it a LLP, be it a Hindu undivided family, be it a private limited company, double limited company, or maybe worldwide conglomerates having their footprints worldwide. So governance is important everywhere. So it's a universal concept, but it manifests itself in different forms as we go along, depending upon the kind of organization we are talking about. ICI has a governance structure in place. Then, and there are different cogs in the wheel for the entire governance part. Then comes the risk management. Now, risk management has evolved a great deal, and now risk management is at the center of many things. Say, for example, IRDA, insurance. The center is risk. ISO standards. 2000 standard before 2015. I have ISO 9001 to 9001. So before 2015, the ISO 9001 standard was something like what you do, what you document, document what you do. It was pretty straightjacketed. But 2015 onwards, the entire standard shifted to risk management. If you read the standard, the center is risk management, right? Then if you come to the Companies Act, you come to LODR, you come to the disclosure requirements, there also, there is a lot of emphasis on risk management in terms of controls, in terms of risk management, and there are specific disclosure. For example, the entire system of IFC, internal financial controls, which is centered around risk management. So it has got two parts. The smaller version is called ICOFAR, internal control and financial reporting, and the larger thing is called IFC, which has got both financial and non-financial controls in the form of a risk control matrix. So which basically governs the risk management of the entire organization, which has got two parts. One is your controllable risks, one is called your uncontrollable risk. Internal controls, external controls, financial controls, non-financial controls. So these are the so this is the entire risk management, which kind of facilitates governance. And the last is compliance. Compliance is one of the most important aspects in any organization, and we have been seeing an evolution in compliances across the board in every country, especially in our country. For example, the laws have also metamorphosized over the years. We used to have those days of sales tax, and today we have GST via service tax. So that's one thing. Then there's a new law of income tax, there's a new bill of income tax which has come. The companies tax has undergone a transformation. Why I'm saying all this? Because for a board, compliance is something which is the top priority, because compliance has the notorious capability to kind of shut down an organization if certain aspects are not complied with. Now, governance, risk management, and compliance exist in an organization at all times. But the problem is that nobody sees it in an integrated way. Governance is there. For example, if I talk of operational governance, then whatever CEO and the team is doing is governance, is operational governance. Risk management, your IFC is risk management. But then it depends what is the level of maturity of risk management in organization. Then compliance is always there. Then you have a company secretary. You have factory managers looking after the factory compliances. Then there are other aspects of compliances which is taken care of by some other departments, say HR department, in terms of your labor laws and things like that. But there is no thread which is weaving together all these three components and having a combined view of that. So that's precisely what we are going to look at today and see if we do have a combined view of things, and how it can benefit the organization a great deal, right? So a normal disclosure which any speaker makes nowadays, that whatever views I'm expressing today are on my own. No professional body, institute, organization, or firm has got any association with it. So that's a normal disclosure. Now, so what will you take home today? First of all, you'll start understanding GRC in terms of its individual components and as a whole, how it means. Then the second thing is, you must be wondering, okay, we have understood GRC, then what do we do with it? The second thing is, how do we actually implement GRC in an organization? And this aspect, what I'm explaining is coming from hands-on experience, which I've been doing in the past, and I'm currently practicing it live today in terms of various assignments that I'm executing on the ground. The GRC implementation, and in fact, currently there is a GRC implementation going on in an organization. So we'll bring in the practical aspects of that as well on the ground. Then internal audit, where internal audit stands with GRC, because it is an important component of governance, and where it stands with GRC. At this point, I will bring in the concept of three line of defense. I'm sure everybody must have heard of the RBI guidelines for operational risk management. Whosoever is there in banking sector or BFSI sector would be knowing very well that what these RBI guidelines stand for and how stringent they are in terms of having a mandatory CRO in a BFSI institution. Then there are three line of defenses with RBI guidelines prescribed. One is your operations, the second is risk management, and the third is compliance. So these are the three line of defense as per the RBI. Operations is governance, risk management, and compliance. So basically, the three line of defense are nothing but GRC, and having a combined view of that, and pretty strictly followed in the GRC in the BFSI sector. But having said that, I had the privilege of attending a conference on BFSI sector where a lot of discourse happened on these aspects of three line of defense and operational risk management. That got me thinking and saying that why is it that this three line of defense concept cannot be implemented in the non-BFSI sector for enhancing governance? So that aspect is also something which would be brought on the table. Now, then we will look into some critical success factors in terms of the practical implementation and how to make GRC implementation practical, implementable, and successful. And then what is the role of chartered accountants who are into risk advisory, or in general, what is the role which chartered accountants can play in implementing GRC? So this is something that we will take home today. I'll try and wrap it up in at least 20 minutes, half an hour to 20 minutes before the scheduled time, so that we have enough time for the question answer sessions or any other questions or any discussions that we want, and any opinions the participants want to share. So you see on your screen, there are three parts of the screen which you see today right now. So there are some names of the company, some American organization, some international, and some Indian. Then there are two agencies, PCAOB and NEPRA. And there is some significance to this. So I invite any comments from the participants as to what exactly you think of this, or what emotions or what thoughts come to your mind when you look at this. And any thoughts? Like when you see Enron or when you see Satyam, ILFS, what transpires in your mind? Okay, These are one of the biggest corporate frauds which have happened. And then, if you remember, when the Enron happened in around 2000, then it brought down Arthur Andersen, which was the top firm at that time. So, and as a consequence, there was a Sarbanes-Oxley's Act which came into picture, and the PCAOB was constituted in India, which basically is an ombudsman or an overarching body which looks after the functioning of the CPAs. Then Satyam happened, ILFS happened, and there was numerous other frauds which happened in the corporate sector in India. And there were so many other things. If you are following Economic Times, or any good newspaper, you must be kind of coming across many newses in terms of income tax raids and GST raids and so many other things which are happening. So all this scenario, raised the need of creating NEFRA. What is the purpose behind it? The purpose behind it is to ensure the correctness of the financial reporting and governance. Auditors have a very big role in ensuring financial numbers and the governance of the organization. I'll tell you how. In how many forms audit manifests itself? One is statutory audit, one is internal audit, one is management audit, one is propriety audit. These are the four types of broad types of audits which are there, which we all read in our study materials when we study internal and finance, right? So in all these cases, what exactly are we trying to do? In statutory audit, we are reporting to the shareholders. In internal audit, we are reporting to the management. In propriety audit, we are again reporting to the management, but from a very different perspective. In management audit, we are getting deeper into the operations of an organization and giving customized reports. But there is one very pertinent question here, and that is, I don't know whether how many have thought about this, or I'm sure this must have crossed your mind. There's a purpose behind for which a doctor is created. Right? There's a purpose for which a lawyer is created. There's a purpose of which engineer is created. Like why do engineers exist in the first place? I mean, this technology that we are using is given by engineers. The laptop, the internet, the PowerPoint presentation, all this which we are using today are given by engineers. The great innovations which are happening, which have been happening, which are happening, electricity for that matter, is all by engineers and scientists. Then lawyers. Had lawyers been not there, how justice would be delivered? If doctors are not there, how good health and arogya would be delivered? So from that perspective, what exactly is the reason for existence of a chartered accountant in the first place? Now, somebody would say, okay, I look after the balance sheet. Then somebody say, no, taxation. Somebody say, no, corporate law, secretarial, or some other things. But those are parts of the whole. Just look at it this way. I'm sure everybody knows GDP of a country. How the GDP of a country is made. What comprises of the GDP number? That number is nothing but what goes into the system in terms of filings, right from a sole proprietor to a conglomerate. And who signs it? Who authenticates the number? Who gives certificates for exports? Who gives certificates for MSMEs? Who gives those certificates? Chartered accountants. Who signs balance sheets? Chartered accountants. Who does income tax returns? Chartered accountant. Who files the MCA return? All this work is done by the chartered accountant. So the chartered accountant is that filter, or I would say is that barrier, or that I don't know how many of you have heard the story of Mahabharata, where Yudhishthir goes to the pond for water for his brothers, and there's a yaksha who's the controller of that pond, and he asks questions to Yudhishthir. And first the brothers, because if they are not ready to answer the questions, or they are not able to answer the question, they die. And then when the Yudhishthir comes, he gives all the correct answers, and then everybody comes to life, and he takes water and goes back. So we are the yaksha. We are the guardians of the economy in terms of the numbers going into the system, because we authorize them. That's the power that we have. That's the power our signatures have. That's the purpose for which the chartered accountants are, they exist. So when all these works are done, for example, in a statutory audit, there is something called a management letter, which basically is a communication from an auditor to the board, to the shareholders, that these are broad governance issues that we have noticed. You please take care of that. Or for example, in an internal audit or a risk-based internal audit, the auditors go deep into the operations of the organization and raise governance issues, rather operational governance issues. Apart from opining on, apart from giving assurance on the processes, because processes are the ones which give numbers. Whatever numbers you get into the balance sheet are only a consequence of a process. I mean, they don't come from anywhere or thin air. A process works, a sales process works, a purchase process works, a marketing works, a project planning works, or project works, or any of salaries are paid. All these activities happen, which has got many components and many activities, and they all result into numbers in terms of sales, in terms of purchases, in terms of inventory, in terms of expenditure and revenue expenditure, capital expenditure, which all are summarized into a balance sheet. So internal audit kind of gives an assurance on those processes and also gives ideas for improvement. That's contribution to governance. Propriety audit, for example, the correctness of the expenditure done. Going deep into it and telling the management whether this expenditure was done properly or not. So these are the ways auditors are contributing to, in a very, very hard and concrete way, to governance of an organization in small forms, because the entire country is made up of all these economic units where the chartered accountants are playing a very, very significant role. So that is why independence, integrity, objectivity, all these are the values which we have to live by. It's a must, because we have a very big role in ensuring the GDP numbers and ensuring the governance of the entire country through our services. Right? So that is the purpose of chartered accountant vis-a-vis the purpose of an engineer or a doctor or a lawyer. And that is why it is called out in many forums that CAs are the major contributors in the growth of an organization. So coming back to this slide, so what really happened is that governance was poor in all these scenarios. That means the people who were running the organization were the ones who were fleecing the organization. And that's why these situations happened. And that is why the reason unfortunately, some of our community, some of the CPAs, Arthur Anderson was the statutory auditor at that time. Satyam, there were firms who were as auditors at that time. So they were kind of hand in glove. So that is why there was a reason felt for the establishment of organizations like PCOB and NEFRA. And I'm sure you must be going through the sites of NEFRA and you will be looking into the newspapers, which basically brings to light the importance of chartered accountants in ensuring governance and financial numbers. And which also, and if you further drill down, the concept of GRC itself, governance, risk management, compliance, which has to be viewed together as a very, very strong engine of good governance as an organization. So that's what slide signifies. So whatever I just told you is kind of summarized in this slide as to how managing any organization is like a tightrope walk, which basically there are risks which are associated with a tightrope walk. Then you identify risk, you huddle together, then you identify, you analyze, you control, you transfer, reduce, and assess risks, right? So that way the entire risk management happens, and then eventually it goes down to the governance, risk management, and compliance of the organization. Now, the overview of GRC. As I said, as I had talked about when I was setting the context, GRC has got three parts to it: governance, risk management, and compliance, corporate governance, operational governance, enterprise risk management, and operational risk management. Now, all these are the words I'm sure you must have heard many times, and some of you must be practicing that also, either through firms or through part of an organization. Or if you are in operations, then these guys would be coming to you for your risk assessment or IFC or things like that. So this is how, and then compliance. Now, compliance, I would dwell a little deeper. Compliance generally is viewed as compliance to laws, but it has got much more to it. Compliance has basically two parts. One is compliance delivery mechanism, which basically means that knowing what all laws are applicable to an organization, what all laws, guidelines, whatever is applicable to the organization, and then identifying who all will be responsible or accountable for the implementation and compliance with those laws, guidelines, and things like that. Then there are contracts which the organization enters into. A lot of contracts which organization enters. A sales contract, there are purchase contracts, there are service contracts. RBI has got a separate guideline for third-party risk management when it comes to NBFCs, because there are a lot of third-party service providers who are providing services to the NBFC sector, and there has to be a risk management in that regard. Similarly, in a non-BFSI sector, there's something called Suppliers Code of Conduct, which is part of the contract management, or which is part of the overall governance of an organization. So this contract management is extremely important, because there are organizations which is bound to liabilities in terms of the contracts which are being entered into, and there are commitments which an organization is entered into. And the last but not the least is your internal policies, procedures, and guidelines. So the compliance is three-pronged. So there is one thing, that is the mechanism which ensures all this, and the second part is actual compliance of these things, and creating an environment or a structure in an organization in terms of roles and responsibilities so that the compliance is taken care of. So when all of these three things are seen together is what GRC stands for. Now, what we'll do is we'll quickly run through the individual components. Now, what is corporate governance? I'm sure all of you, I will not spend much time on these slides because all of us have read these things in our study materials and, while preparing our examinations. And now when we, do our work, so we keep on reading all these things. So there is an institute, corporate governance definition given by the CS Institute. There is a Cadbury committee report which is considered to be one of the pioneering reports for corporate governance by Sir Adrian Cadbury in the UK, in the UK Commission report, Cadbury Commission report as it's called. And there are three reports which have come in the three committees which were constituted in India, which is Kumar Mangalam Birla Committee, Anna Narayan Murthy Committee, and the Naresh Chandra Committee for the corporate governance. Right. So this is the definition of corporate governance. Then there are certain components of corporate governance. Now, there are certain words which are written over here, principles of corporate governance. What are accountability, transparency, independence, responsibility, fairness, integrity, leadership, risk management, shareholder rights, and continuous improvement. These are the aspects which are the bedrock of corporate governance. Now, let's dwell a little deeper into this. Corporate governance is at the board level. Now, what is the composition of a board? You have people who are holding investments in the organization. There are people who are not holding investment in the organization, right? Then there are independent directors. So there's a composition, and as per the Companies Act, there are different laws on the composition of board for different organizations. For example, private limited company, public limited company, which are not listed companies, and the listed entities. So there is a certain composition which is there for the board. But who exactly are running the organization? What is the competence of the board? How the board performance is measured is all our subject matters of corporate governance. Nowadays, I'm sure if you scroll through the LinkedIn, there is something called board stewardship. There's an organization like that. So that board stewardship is basically our consultants to the board, which basically helps them manage their performance. So, but then when all those things happen, these are the principles which govern the corporate governance part. Now, there is something called a tone at the top. This phrase is also used a lot. What is tone at the top? Is basically the sense which prevails at the board level, and in terms of is a collective sense of the group of people at the top and how really they want to run the organization. For example, there are certain organizations in the country who are known as amazing governance. I mean, the name is enough. You know who I'm talking about. There are certain organizations you say, yaar, dekhna padega. That's the kind of emotions it drives you when you listen to the name of the organization. I'm talking about the very large ones. So that is what tone at the top means. Then there are certain organizations where, say for example, the risk management function or the corporate audit function is very strong. Say for example, I was part of an organization, rather giving consulting to an organization long back, which is #1 liquor company in the world. At that time, their corporate governance was impeccable. The way they used to deliver it, their risk management frameworks, which was at that time in 2000 what 2004 or 5, that time it was all driven online. There are organizations which have got a very comprehensive risk management system, both operational and financial. But there are certain organizations who just have one ICOFAR RCM only to tick box for 138 or LODR for that matter. So what I'm trying to bring on the table is the difference in the thinking of the board, how they want to go about it. Doing it for the sake of it, or doing it in the true sense of it in order to enhance the governance of the organization. These aspects, what I'm talking about, are equally applicable to a startup and to a conglomerate. The principles are universal. But having said that, they will manifest itself in different forms depending upon the nuances of the organization, the industry in which they operate, and the kind of business they do. But fundamentals don't change. Now, coming at the LODR part, or the SEBI and LODR company, what are the aspects? Composition of board, I was just talking about it. Admitting of women directors, and to basically ensuring fair representation, gender equality, admitting of independent directors training and evaluation. See, directors training and evaluation. Nowadays, if somebody wants to become an independent director, they have to pass an examination, and then they become independent directors. So there is competency parameters for becoming a director also. Then constitution of audit committee, nominations committee, subsidiary company management, risk committees, internal audits, SFIO, serious frauds for that matter. Coming of frauds, NEFRA has came up with a notification recently, which talks about if there is a fraud of up to 1 crore, then the auditor is duty bound to report it to the management. And if there's a fraud beyond 1 crore of value, then they are duty bound to report it to the MCA through proper channels. So that's about serious frauds guidelines. Then ESG reporting, very big word, very big buzzword nowadays. ESG reporting, environmental and sustainability, digitization. Digitization is another very important. Cybersecurity, e-governance, and CSR. So these are the basic components on which the corporate governance, because these are the aspects which give an overall direction to the organization and fires its engine for growth. So that is the framework for corporate governance. Now coming to the operational governance. Now what operational? Let me just I generally don't do that, but I will still would kind of read out this particular definition. Operational governance is centered on a critical operating decision made by executives and managers and follow through on the execution of policies which are formulated by the board. It presents a framework for managers to improve how decisions are made and carry out and contribute to the better operational risk management. So that's operational governance view. So these 4-5 lines, what are they summarizing is the function of all the work carried out by CEO and his team in terms of meeting the objectives of the organization based on an annual operating plan, continuous improvement, meeting the bottom line, meeting the top line, improving profitability, enhancing sustainability, all these operational issues, which can, if you generalize them, go as deep as the cleanliness in a factory way, or, for example, operations in a BPO where you have a floor full of agents and they are doing transaction processing on two sides of the vertical. Or you have an agrarian, agri-based company, the efficiency of the farms, of the farming techniques which are being employed for improving yield. All these things, all these three examples, which are from the primary, secondary, and tertiary sector of the economy. Primary sector means your agrarian economy, then you have secondary sector, that is your industrialization, and the tertiary sector, that is service sector. So all these three examples were from these respective sectors, but the principle of operational governance remains kind of same. So that's operational governance for you. Now, let's look at a typical organization. You must be wondering, yeah, ये तो बड़ा simple सा chart है, but there is so much to read into this. Now, when an organization is made or created, you have either the sole proprietors or the partners or the shareholders who are sitting at the top. Let's say, for example, in companies, say, for example, in the United States, there are a lot of organizations where you have the board and you have the CEO. You never get to see the shareholders. Maybe a guy who's holding a lot of stake in an organization might be sitting in a very in an inconspicuous way in a corner and looking at the proceedings and raising his finger quietly and saying, I have a question. And please introduce yourself. I'm the shareholder of the company for almost 20%. So those are shareholders for you. There are shareholders like that. Then you have the board. Board, as I have already explained, consists of people who hold stake in the organization, pecuniary and non-pecuniary interest. Then you have independent board members who are generally governing the organization. Then you have the CEO. At this point, I'll take you back to the concept of dichotomy of ownership from management when the organizations grow. So the CEO is the person reporting to the board, and that's where the dichotomy of ownership from management exists. That comes into picture. And then you have the CEO and his team. Then you have the core processes, the organization structure, and then the environment in which the organization operates. That's an internal environment and an external environment. Anything within the organization is kind of controllable. And it's outside the organization is uncontrollable. For example, the government policies, right? Do you have control over that? You have geopolitical situations. There's no control on that. COVID happened. The businesses had to adapt to that situation. Natural calamity happens in some part of the world. Say, for example, there is a earthquake which comes in Japan, right? But the Suzuki, the Indian subsidiary operates fine. The risk is limited to the extent of what is happening in Japan. So controllable, uncontrollable factors. Then there are factors which cannot be, which are residuals. When you have done all your controls, all your mitigations and everything, there are certain risks which you don't have control over, and those are residual risks. So how do you manage your residual risks? Insurance is one way of managing a residual risk. Insurance is one of the strongest and one of the most potent strategies to manage external risks or residual risks. So that is how. And then you have this internal audit function, which is independent, reporting into the audit committee, administratively reporting to the board, and then it actually sits on the function of the organization and rather sits on GRC and reports to the board whether everything the way they are manifested is being operating or not. So this is the overview on operational governance, right? So you must be realizing whatever I'm explaining to you is kind of, you have read that some way or the other in some form. So we will see through a diagram as we go along that how it all converges at one place and how can it benefit and how that thought of GRC can benefit the organization. Okay. So once the organization is there, then you have this organization structure and core processes. Now, these are the core processes in any organization. You have the revenue function, you have the production or the operations, then you have purchases, inventory, logistics, record to report, human resource, and the entity level functions. right? So these are the processes in an organization generally. And then these are some granularization. What is there in order to cash, what is there in production, what is in procure, what is in inventory, and so on and so forth. Say, for example, let's take entity levels and ITGC. What all we look into that? There's corporate governance, there's risk management, there's policies and procedures, organization structure, integrity and ethics, security and safety, occupational health and safety, which basically part of ESG, environment, crisis management, and change management, business continuity. All these are part of your sustainability aspects. And then ITGC, whether you do statutory audit, you do internal audit, ITGC is all pervasive nowadays. And then this monster called artificial intelligence is making inroads everywhere, which is kind of disruptive and impacting every aspect of governance nowadays. Every aspect. So, and how it can be used or whatever. So, all these part of your process framework or the operational governance. Now, this is a very, very important and fundamental slide. Understand this very, very carefully. On one hand, on your right-hand side, what you see is vision, mission, and goals. VMV is vision, mission, values, which is basically the goal of the organization. Then the next level, you have objective, strategies, policies, and SOPs. Objective for the individual processes, for example, revenue, for example, cost, what is production, operation, and things like that. So each, and I'll tell you how this whole thing works. And the last level is your instruction manuals, your guidelines, and quality management, things like that. So the overall organization is governed by vision, mission, values. The vision, mission, values of the organization should not be lofty. They should be practical, and they should be such that they push the organization to achieve higher goals. And not just the board, the individual worker of an organization who's working at the shop floor or an agent who's processing transactions should identify with that vision or that vision, mission, value of the organization in terms of the work he's performing. That's the strength of vision, mission, value, and it's cascading down the line. Then comes the individual processes. Now, if you see that there are three terms over here: mega process, major process, sub process. Now, what is a mega process? Supply chain is a mega process. Why? Because it contains a lot of major processes into it. For example, supply chain has got procurement, inventory, logistics, warehousing, and operations into it. All this put together is supply chain. So each of these are major processes: procurement, sales, procurement, your inventory, warehousing, production. All these are major processes. Then let's take one major process, which is procurement. There are sub processes under procurement, which starts from where? It starts from vendor identification, vendor database, further come down. Then you have this process of some large organizations have this process of called vendor registration. Unless you're a registered vendor, they will not even deal with you. So say, for example, big public sector organizations have this process of getting registering the vendors first. So it's a huge activity to get yourself registered as a vendor first, and then the business comes in, right? So that's vendor identification and selection. Then comes your tendering, the PR and PO, purchase requisition. Then comes the purchase order. Then you have place. Then comes the price validation part in terms of mobilizing various quotations, doing procurements. And so these are then once the price is decided, then the PO is raised, then the material is received, then the receiving is done. In that case, then the purchase is booked, and AP is accounts payable is created, and then eventually a vendor performance evaluation happens, right? So these are the sub processes in procurement. Similarly, there are sub processes for each of the major processes in an organization. Now, within price, so when we are doing price validation, there are a lot of things which we do. We will invite a quotation, we will open the tenders, we will make a comparative, technical and financial. We get deeper into it. All those are activities and events. So mega process, major process, sub processes are governed by strategies and policies. And activities and events are governed by work instruction manuals and quality manuals. Those small level activities when you are doing production, there's a component which is being manufactured. Then there are time and motion studies based on which quality norms are established. So those are that level. So that is how. So what you see on the right-hand side in terms of objective strategies, policies, work instruction manuals, guidelines, quality manuals, all these things are components of an internal control environment. That is how the control environment and organization is created, right? Say, for example, you must have heard of a business plan of 3 to 5 years horizon, for example, right? Every organization would have a business plan. Yeah, karna kya? What? Say, for example, I'm at 100 crores today. In 3 to 5 years time, I have to achieve 500 crores, 5x growth I want to achieve, right? How it is to be done? So that will result into a business plan, a projected financial statement. There would be assumptions into it. There would be SWOT analysis. There would be economic analysis. There would be country analysis. There would be geopolitical analysis, which would be forming part of all that business plan. Then there would be even before all this, there would be assumptions based on which those numbers would have been created in terms of projected financial statements. There will be projected cash flows for all this, right? So once that all thing is made, it is presented to the board. Board says yes, sounds good. Board will have its own questioning and things like that. Deliberations will happen, and eventually says, okay, we work to this plan. Then there would be two elements to it. You would grow organically, and you will grow inorganically. Organically means normal growth in terms of enhancing market share, blustering top line, bottom line. Inorganic growth means acquisitions. So that is how the growth objectives of organizations are created, right? Then once that this business plan comes into execution, then you take 1 year, your annual operating plan, you go call it an AOP. That annual operating plan with all those assumptions which you had made in 5-year plan. So you take 1 year out of it. You revalidate it in the current circumstance, because in the 5 years, a lot of things will change. 5 साल में तो governments बदल जाती है in a country. Political scenarios change. There's so many changes happen, right? So you take that one annual operating plan and you modify it according to the current circumstances, keeping your overall objective intact. Say, for example, when the COVID came, a lot of companies went back to the drawing board. One example, IT sector boomed, airline sector busted, restaurants busted. But now, when the normalcy was restored, IT sector went into a huge firing mode because there was overcapacity. So that is how the business scenarios change and things stabilize. But having said that, that 5-year plan remains intact. The AOP remains intact with modification. That your AOP will take shape. Now, once the AOP is made, then the next step is your budgets. Budget for sales, budget for marketing and advertising, budget for purchases, budget for production, budget for HR, and so on and so forth. Each budget would be prepared. And even before the budget, between budget and the annual operating plan, there would be strategies. Sales strategy, marketing strategy, purchase strategy, production strategy, HR strategy, IT strategy, so on and so forth. Strategy of, if I was at 500 crore, I have about 100 crores and I wanted to grow at 500 crores, what path do I take to reach that in terms of my revenue numbers or in terms of my sales volumes, in terms of my vendor database or vendor base, which could support that level of production or that level of operation, my human resource in terms of the talent I need, the IT infrastructure in terms of IT strategy. What do I need? Do I need to have higher level of digitization? I have to bring in a new ERP. I have to bring in new softwares. I have to implement artificial intelligence. I have to implement blockchain and so on and so forth in terms of achieving my what helps me to do that. So that's the IT strategy part of it. So those many strategies are made and they're presented to the board. So there is a sign off. So there is an AOP, strategy, budget, right? And when the budget forms, now to implement the budget, you need policies. Say, for example, credit policy. In case of sales, the credit policy, the way it manifests itself in an IT industry will be very different from a credit policy, the way it manifests itself in the automotive industry or a FMCG for that matter, or an airline for that matter, right? So the business nuances will give shape to the credit policy, but credit policy is required to implement my sales budget. Because if I don't have a sales policy or I don't have a credit policy, then my debtor, I will not be able to manage my debt as well. Because if I have a loose credit policy, then eventually it will result into bad debts or aged vendors or aged receivables because I did not check the antecedents of my customers before dealing with them. So that is how this entire operational governance works. Further down, right? Standard operating. So once the policy is made, then you have standard operating procedures. The sub process I had made, there would be a flow chart for each of the sub processes. There would be narrative. There would be responsible, accountable. There would be who initiates, who verifies, who authorizes for each of these sub processes, which would be enshrined in an SOP. Then you would be also be identifying. Then you will be explaining those processes, and the whole SOP will emerge, right? So you have made SOPs. Now you go further one down, say for example, AR or AP activity. Now, if there's an ERP, then you'll take screenshots, explain every single field, how it is to be filled, what discipline has to be looked into, and so on and so forth. There is a quality manual, there is a production manual, which goes into the activity event level, which is but in line with the SOP. So basically, below strategies, everything starts becoming straitjacketed and discipline oriented. Till the strategy, it is very, very objective, very, very intellectual, very, very, it is very, very dynamic. But below that, there is a discipline which is required in operations. So all this is nothing but all different moving components of an operational governance framework. Now, on this sits risk management. Say, for example, your SOPs and policies. When you identify your risks, the controls for each of these risks, the control design will be coming from the SOPs. So to that extent, your risk management framework gets interlocked with your SOPs. It can, and then your risk management at a certain stage gets interlocked with the performance management in terms of your MISs. I'll show you how. So this is how the entire operational governance works. Now we come to risk management. Risk management. So this, I'm sure you must have got a flavor of corporate governance and operational governance, how it actually operates across the board. Now, coming to the risk management part. So there is a certain legal force to it, which is there on the screen. Applicability, every company, listed companies, and things like that. So there are different sections, 134.3, 177.4, 149.8, Schedule 4, Part 2, LODR, and things like that. Though this is nothing but a flavor in terms of where the statutory force is coming from in risk management. So when the risk management is done, what all we do over here? There's an objective, there is a risk management framework, there is risk management policy, then there is a risk management framework in terms of the RCMs, the risk control matrix. So risk control matrix, there is an RCM, which now this RCM has got manifests itself in different forms. Something called ERM, enterprise risk management, entity level. Then your operational risk management, which is your operation level. In terms of all those processes which we are, so each process would have an RCM at a sub process level. So there would be financial risks, there will be non-financial risk and corresponding controls, right? Then risk management, and then there is a process through which this emerges, which is kind of creating RCMs. So once these RCMs are created, then they are tested over a period of time, which is basically in contemporary times is called the IFC testing, management testing, and then they're done, which is done by the statutory audit. So that is how if you remember, I had talked about the management letter, right? So management letter emerges through these tests of risks and things like that. So the more comprehensive they are, the better it is. And the chartered accountants, as I said earlier, would be able to constructively contribute to the governance of the company and the governance of the country as a whole. So that's about the risk management part, right? Now coming to the compliance part. As I had explained earlier, and that's the reason why I had said that context initially in terms of giving those bifurcations and so that at this moment wouldn't be entirely new to you, because your mind must have processed the information that was being thrown to you, and you must have started already interconnecting a lot of things. So all this, whatever we are looking at today, is all interconnected. Everything you move one piece, the other piece would move. I'll give you an example. When we do audits, it's a very common thing, like statutory audit or internal audit or any audit or even tax or whatever work we do, even in due diligence and when we look at receivables. यार आपका aging बहुत poor है. आपका receivables बहुत a lot of aged receivables, a lot of money is stuck. I don't know how what kind of credit policy you have, or how is it that. So where is the root of high receivables or higher aging in receivables? The root lies in credit policy. What kind of strategies you made? How you were approaching the market? What kind of customers you had? Did you do the due diligence of the customers at the time of entering into business or not? Did you do did you establish checks and balances when you're doing your sales? Did you take timely decisions in terms of doing cash sales or sales against LC, or just giving credit period without any protection mechanism in terms of getting your money back, or exploring possibilities of factoring? Online factoring is TREADS guidelines are there in RBI. So TREADS, in case of, especially in the MSME sector, the receivable selling off is receivables factoring is a common thing. So how have you kind of put that mechanism together in terms of that risk management aspect, right? So your credit policy and strategy is deciding the consequence of that is your poor receivable. So that is how it all works. It's not in silo. So everything is connected with each other. Now coming back to the compliance part of it. As I said, there is something called compliance delivery mechanism, which is the biggest concern of the board. So compliance has to be, now let's look at in a different way. We have a law, right? There is a non-compliance of the law. So there are different type of consequences. One is the provision doesn't talk about the consequence of violation. There's a general penalty for that, right? That's one. Second thing, a provision is violated and there is a penalty on this. Return filed late, there is a penalty, right? GST not filed, GST not claimed, GST return not filed in time, penalty. Then there is something called prosecution and fine, which basically means that if a violation is, then there are cognizable and non-cognizable offenses. For example, a violation is done, the first consequence is immediate arrest, non-bailable warrant issued, that the director of the company picked up and jailed. And the provision, the violation is non-cognizable. You don't even get bail. Bailable, non-bailable. And then the prosecution happens and there is a consequence in terms of imprisonment and fine. So in case of legal compliance, these are the three categories where the gradation of compliance can be looked at in terms of ensuring compliance first of those provisions where there's such a huge risk in terms of, and the biggest consequence of those situations is reputational damage of the organization. That's why, that is how compliance, a very well structured compliance function in organization is an absolute essential. And you will find that when you go for your audits, when you observe, engage with your clients or you engage with the organization, you would be seeing these things conspicuous by their absence or very loose, right? So that is the importance of that legal thing. Coming to contractual. Contractual compliances in terms of managing all the contracts, sales contracts and purchase contract, or any other contract the organization is entered into. There are so many observations when we do internal audits, we find out that there are conflicting clause within the contract. That means somebody has not done a legal vetting on the contract in the first place. So if you have such a contract, then if there is the dispute with the suppliers and you go to the code of law, then you have already shot yourself in the foot, because the contract is ambiguous. So that is why a legal vetting of the contract is very important before it is entered into. Once it is entered into, its consistent compliance is very, very important. Say, for example, hiring labor laws, hiring labor, contract labor. The primary responsibility is that of principal supplier in principal hirer in any case. And if you are not looking into these contract labor things, it might hit you back. If suppose a labor inspection happens on, say, on a construction site for that matter, or on a factory where you have hired labor or a contractual labor in terms of PF, ESIC and things like that, the contractor is not compliant with it. I mean, I have faced a situation in an organization where it was a food manufacturing company, and there was labor violations to the extent of 20% of the bottom line of the organization. 20%. That means the money which was not paid to the government was almost equal to 20% of the profits. So these are the things which happen when these aspects are not taken care of. Very important to look into compliance and having a very robust mechanism for that. Now, what you see on the screen is basically a mechanism, an example of a mechanism how the legal compliances can be monitored. There can be a scorecard. Now, this is a practical thing which I mean which we had I used to use in one particular organization in terms of reporting the percentages of compliances. So the board gets a very objective view what the level of compliance is, right? So this is the example of legal compliance, actual legal compliance reporting. Now, this is contractual compliance. These are the contracts which are there. So you have in a contract, what all you have? You have got SOW, any statement of work. You have SLA. So first, it starts with SLA. For example, you have an organization has outsourced its function to say procurement, AP, AR to a BPO. It'll be bound by an SLA. So there has to be an SLA monitoring. Then there is an SOW, statement of work, based on which the way the outsourced work has to be done. But where you have outsourced your work, you need business continuity also. And there has to be an SOP on the basis of SOW. And then there is a portal or there is a escalation mechanism that you have in terms of interacting with your service provider. And where it stands from a scoring standpoint or from a performance management standpoint, where you have more than one vendor. So this basically talks to the RBI guidelines for third-party risk management. There's one way of reporting and controlling. So you have your SLAs, your statement of work, your BCP, your SOP, your other internal standards, and your operational standards of ISO, TQM, and things like that. And this is how you control your compliance in terms as one part of the compliance, right? And your internal compliance in terms of guidelines and SOPs will be taken care of by internal audit. Now, we have had a overall view of governance in terms of corporate governance and operational governance. Then we went into risk management, the way it is created, the way it is managed, the way it is reported. Then we came to compliance, the way it is created, the way it is managed, and things like that. Now, what we see now is the convergence of all the three at one place. So I call this the governance grid. So if you see, all the three things will converge at one place, right? So at the top, what you see is your corporate governance in terms of shareholders and board. Below that, you have the CXOs and operational governance in terms of your core processes, in terms of entity level, IT, marketing, sales, procurement, inventory, logistics, warehousing, production, maintenance, accounting, banking, treasury, finance, human resource, and administration. Any organization, any industry, any scale, these are the core processes which will always be, right? Now, below this, There are three aspects. There are enablers to these aspects, and there are three dimensions to it. So it's a 4x3 matrix, if you see. On the y-axis, you have strategic, operational, financial, and compliance. And on the y-axis, on the x-axis, you have people, process, technology. This is also taught by COSO. It is a model published by COSO. There's a COSO body, Committee of Organization of Tradeway Commission is basically the full form of COSO, and the guidelines which come through COSO are followed by the Institute of Internal Auditors. These are very fundamental guidelines which govern the entire governance and internal audit function worldwide. So, right. So this strategic, operational, financial compliance, people, process, technology is the gift of COSO to the world. Now, there's another thing which you see in gray, data quality, QUIKA, CUIKA. Now, whenever a function operates in terms of sales, procurement, inventory, function, or whatever, there is a process. We have already seen how the process works. And when the process works, say, for example, an invoice is raised, right? A PO is raised, right? Then salaries are paid, then expenses are incurred. All these monetary impacts. So whatever is happening is a lot of data is generated. This data can be qualitative. This data can be quantitative. Quantitative in terms of expressed in terms of money, or expressed in terms of different units of measure. How many ton of production? What is the pH value of the solution which is being used? Or if I'm making a slurry of PTA and MEG to make a polyester staple fiber yarn, then what is the specifications of that in terms of my production MIS? So all this is data, right? Or how many, I have say 35 agents operating. What is the performance of those agents in terms of quality, or whether they're meeting the SLA or not? All these are examples, or all these are basically manifested in terms of data. Now, the quality of data which is generated by these processes or activities is directly proportional to the strength of the process. If the process is not laid down well, the data will not be generated well, right? And that will not facilitate decision making the way it should be. So data quality is very important. Now it has got 4 components to it: CUIKA, which basically stands for C for collection, whether the data is collected at that certain frequency. If you go to the guidance note or IFC and go to the end of that 250-page document, there is a table over there in terms of sampling for doing an IFC testing. It says if annual 1 sample, half yearly 2 sample, quarterly 4 sample, and if it is the daily 25, maximum frequency with which the data is generated, right? So the first thing is whether that data is captured properly in an ERP or in a management system other than ERP at the frequency with which it is generated. The second aspect is utility of the data. I'll give you a very simple example to it. Your timesheet or an attendance sheet of a worker, or your timesheet in a firm. If the timesheet shows 6 to 8, 9 to 6, 9 to 6, 9 to 6, 9 to 6 every day, will it make any sense? It's not practical. A practical timesheet would look like 8.58 to 5.56 ऐसा. So these are the values which will be coming. So that will have utility, because that will be a practical data. It can't be so precise as 9 to 6, 9 to 6, 9 to 6, 9 to 6. Can't be. So similarly, in the positive time, I could have given more examples, but in the positive time, I would hold on to this only. So that is the utility of the data which comes in your hands. This concept will also help you where after this lecture, when you go back to your work, when you get data in your hands, whether you're doing a tax work, you're doing an MSME work, you're doing statutory audit, you're doing internal audit, you're doing due diligence, or any other work, you're doing GST. So when you get data, at least question it once, whether this data is reliable, and carry a reliability check on that on a sample basis. So you'll just see the results which you sometimes you'll get shocking results. I mean, you can even stumble upon situations that the bloody data is fudged. right? I mean, you must have seen a lot of news in the organization, in the newspaper, that a GST fraud was detected, where a lot of credit was claimed on fake invoices. So when you were whosoever was doing the GST audit, or whosoever doing that work from our community, they did not do a data check. That means, right? So so that's the utility of the data. Then comes I, that is integrity. One of the most important things. Integrity has four parts to it. One is data has to be reliable. Then O, data has to be objective. A, it has to be accurate. Reproducible. That means if suppose I say for example, a senior says or a board member says, I please share the MIS of 2002, 2003, 2022, 23. The retrieval of sales MIS, for example. The retrieval time of that MIS should not be more than 15 seconds. It should not be happening, oh, sir, please give me a day, I will come back to you. So that's retrievability of a data. And ERP, if implemented properly, ensures instant retrievability of the data, which basically contributes to the integrity of the data. So once collection, utility, integrity are ensured, only then data becomes knowledgeable and it is actionable, which is a bedrock of any strategy, any operational decision, any financial decision, or any compliance decision for that matter. So when you're doing when we talk of strategy, what are we talking about? We already talked about this: business plan, business realities, assumptions, models, business strategies, budgets, measurement matrix, and etc. Though that's our components of strategy or implementation of the strategy. In operations, what we talk about policies, we talk standard operating procedures, segregation of duties, delegation of authorities, guidelines, standard, ISO, TQM, Six Sigma, so on and so forth, which basically ensures the operations of an organization, right? Then financial. Then your financial statements, gaps, accounting standards, relevant laws, financial management is a working capital, banking, treasury, cash flows, and other functions performed by the FP&A, financial planning and analysis function. So in finance, you have three pillars. One, accounting and reporting. Second, treasury and banking. And third, FP&A, financial reporting and analysis. That's the three pillars of a finance scenario. And last but not the least, compliance, which is legal, contractual, and internal standards, right? So, but in all these four scenarios, you have four dimensions to it. One is people, process, technology. And within that, look at it this way. I might have the best of the procedures in the world in an organization, best SOPs, best documentation, but the people are not oriented well and they don't have the intention. You think it will succeed? It will fail. It will fall flat on its face. Technology, whatever level it reaches, whatever, howsoever sophisticated it becomes, technology will always be an enabler of the processes. Say, for example, processes can be automated 100% with the help of technology. But having said that, the user is always people. So if it is not used properly, then the whatever investment you've made in process and technology will fail. So people are the most important aspect in any organization. Anything. If you get your people right, more than half the battle is won. But having said that, it also to be facilitated by process and technology, and then strategic operation, financial compliance. So this model gives you a 360-degree view of looking at any aspect anytime. And whatever you're doing in the domain of a startup account, this aspect will give you a 360-degree of any single thing at any level. So when all these things are there, that's when comes the ESG and the risk management part, risk and control part. Because ESG and risk control addresses all of the above. So that's your governance grid. And how all governance, risk management, compliance converge in one place that's what it represents, right? So now that we have understood the concept of GRC, we will see how it is implemented. Now, the first thing is the baselining. What we see in this is that we do a diagnostic of an organization. We run a diagnostic of an organization, and we see where the corporate governance, operational governance, risk management, compliance are currently in what form are they currently, right? Then we go deeper into it, right? And then we kind of make notes on as is scenario and start finding gaps into it. Because, say, for example, corporate governance, there is a framework prescribed by the law. Operation governance, there are leading practice. We call them, we often use the word called best practice, right? Best practice, leading practice, guidelines, so many, corporate folklore, and there's so many other things which to fall back upon from an operation governance standpoint. Like what is the ideal procurement process, say in cement industry, ideal procurement process in an IT industry, ideal procurement process in an airline industry, for that matter, right? Vis-a-vis, where do we stand today in terms of operational governance, say whatever industry you're looking into. So that will give you the gap when you compare it against the best or against the leading practices, right? So that gives you a list of a lot of gaps or improvement ideas. That's when the next step comes in terms of structure design. I'll give you an example of a structure of a functional GRC model. On one hand, you have governance. So corporate governance is taken care of, right? And then you have operation governance. Now, CEO and his team is doing the operations. Now, there is something called a service excellence function. Many organizations have it nowadays. The service excellence function is largely into improvements and other special projects on the request of management. So that's operational governance, right? And then later comes the risk management part. So imagine there is a one guy who's taking care of all the performance improvement initiatives, and he's also contributing to the corporate governance aspect. Then comes one person who is looking into the entire risk management, ERM, operational risk, IFC testing, and things like that. He just does risk management, CRO, Chief Risk Officer. In a BFSI sector, it is a mandate to have a CRO, right? Then, so you have a CRO. Then comes Chief Compliance Officer. And nowadays, you have Chief Compliance Officers in an organization who is responsible or accountable for compliances across the board. He might in all likelihood, he would be a lawyer. A Chief Risk Officer would be somebody who is a chartered accountant or a company secretary or a CMA or an MBA but who specializes in risk management, right? And this guy who's into performance improvement and things like that, he might be an engineer or depending upon the industry and or maybe a chartered accountant also who knows industry well, who's heading these functions. Now these three gentlemen will roll up to a guy who is responsible for GRC. So there's a GRC chair in an organization, which is which would basically control, kind of oversee all these three functions and ensure that they are run in tandem. And there is a overall reporting which is happening to the board. So GRC head reports into the executive board, or he might report into the CEO, because GRC is kind of embedded into operations, right? So that is how a GRC mechanism can practically work in an organization. And then there can be initiatives which can be taken. Say, for example, there are quality reports which are coming in, there are issues in production and all that. So there can be Six Sigma projects which can be run. There are improvement projects can be run. All those performance improvement aspects can be done under the auspices of the service excellence function. Then there are risk management reporting. There are ERM issues which are coming in. There are operational issues which are coming in. So the risk management guy, and there's this, he's participating with the operations in terms of mitigating risk for their operational aspect. And then he's also sitting in business performance management meetings to regularly apprise of, give them a sense of where the mitigation stands, or in the change business circumstances, if any new risk emerging, then the risk guy is feeding into operations or the sales guys or the board in terms of the new emerging risks. Very dynamic function. And then the legal guy who is with the help of, say, software or some dashboards, giving regular updates on legal, contractual, and internal reportings or internal compliances. Right. So, or from with this perspective, the entire the GRC function can operate very well and can give a lot of synergies to an organization. So that is how a GRC function can operate practically. Now let's see how internal audit, and I'm not getting into definitions of internal audit and things like that, or whatever internal audit does in terms of control review, integrity of information of IT controls, safeguarding assets, regulatory compliance, and process efficiencies. Right. So this is how internal audit function is connected to the GRC. So GRC will be subject to an internal audit. The way you have a sales function, a chief sales officer, or chief revenue officer, or chief procurement officer, or the supply chain head, or risk head, or chief operating officer, or whatever, chief risk officer, and things like that. But and similarly, you have chief GRC, governance of the chief GRC officer, right? So this GRC function will be subject to internal audit as a function. That would be the role of internal auditor as the third line of defense. The first line of defense is operation governance and corporate governance. The second line of defense is the risk management. And the third line of defense is internal audit and compliance. So the internal audit as a third line of defense would be auditing the GRC function to make sure that it brings in the value, what it's supposed to bring. So that is how this entire mechanism works. And then if you see the ICAI standards, they also in some form talk about GRC. There is SIA 130, which talks about risk management. There is SIA 140, which talks about governance, and there is SIA 150, which talks about compliance. So our IIA standards are also talking about GRC. About the only thing I'm trying to do over here is to give a combined perspective of these three functions, so that if they are brought together and managed together, then they can bring in tremendous value to an organization. Tremendous value. So that's how. Now, coming to some critical success factors of these GRC functions. As I already dwelt upon in the past, during this course of our, during the course of our lecture, tone at the top. The entire force of the GRC function comes from tone at the top. Then integrity, transparency, objectivity, being open and honest. That's another thing which is required. Now, this is required not just at the board level, every level. It's all about the value system in an organization. Another thing that reminds me, that conference that I had attended some time back on the BFSI sector, one of the most talked about topics was values. Value system in an organization. What kind of value system you are propagating? What the value system the leadership, the CEO and his team and the board is propagating in an organization. Right? Because that organization is known by that value system, because it gives that value system gives that character to the organization. So that's when transparency, integrity, objectivity, and being open and honest comes from. So that is also very important to as a success factor for this organ. Then understanding of GRC and IA, this whole concept by almost everybody, especially the board and the C-suite, what understanding they have for that. Then clear strategic objective. We dwelt upon making of strategies vis-a-vis the vision, mission, values, and then strategy feeding into policies and procedures. So how crisp and how well defined are your strategic objectives across processes is another very, very critical factor for GRC. Then GRC delivery mechanism and measurement. How do you measure? Say, for example, as I talked about the three components. First, operational excellence. How much value has been delivered by the service excellence function in terms of cost savings, in terms of performance improvement and things like that. Whether the organization risks are mitigated at all times, largely mitigated at all times. You can't predict COVID, you can't predict earthquake and all that, but mostly the organization's risk are mitigated. And the organizations are largely compliant, and there are no major non-compliances happening, and you are not on the wrong side of the law. And I had demonstrated how these things can be measured. So, how the GRC delivery is being measured. And last but not the least, I borrow from our Vedanta, at our Indian philosophy, Indian system of philosophies, where there are two things I have not written over here, but there are charitra. One is sanskar, one is acharan, one is bhav, one is vyavhar. Right? These are the four things, and all these are related to people and organization as such. Say, for example, charitra of the organization and charitra of the people you are getting on board, or their sanskar, or their value system, acharan, bhav, and then vyavhar. And there's another word called pravritti, which is a sum total of all this. The pravritti is basically something which is created by the function interplay of all these things. What is the pravritti is something like, if you given a situation, how would a person react in the first way when if he's not influenced, then how would he react? What is his pravritti? What is his inclination towards something? So this particular thing in terms of charitra, sanskar, acharan, bhav, vyavhar, and pravritti, these are the 6 things which are absolute essential to be addressed from a people standpoint and from an organizational standpoint. All these 6 things are a different subject matter altogether in terms of continuous learning and self-improvement. But they have a very, very solid bearing on the sustainability of GRC. Now, how CAs can be, CAs are uniquely positioned in making a GRC function a success. So one is uniquely positioned because we guys are uniquely positioned to deliver GRC because our education and training is so rigorous, because it gives us exposure and knowledge to understand operations, risk management, and compliance. Nobody understands GRC as better as we do because of our education and training. Then, as I said, education and training touching all components of GRC. Then there's a unique trait of attention to details that we have. This GRC function requires a trait called attention to detail. There's nobody in the world more detailed and who has attention to detail like chartered accountants. When I say chartered accountants, I mean chartered accountants, CPAs, all our fraternity as such in the world. Nobody has that attention to detail and that sharp eye to find out small things. So that trait is very, very important in terms of delivering GRC. Then patience. When you are dealing with such complex issues, you need patience and understanding to understand complex scenarios, because each situation will have multiple dimensions to it, not just 1 or 2 dimensions, multiple dimensions to it, right? So there has to be the mind has to be tuned in a certain way to address those complexities at a given point in time whenever situation comes in front of you. So CAs, chartered accountants, are uniquely positioned in terms of understanding those complexities because of the patience and understanding they have. Then comes how this aspect is given an opportunity is effectively cascaded down the line. Basically, communicating this aspect down the line in terms of staffs, in terms of people, we are the best place for that. And then, last but not the least, in terms of ensuring compliance and monitoring through periodic reviews in different forms. So these are the factors which places us uniquely in terms of being a very, very strongest agent of implementing GRC in an organization, right? Now, as we draw closer to the end of the presentation, 2 things. The devil is always in the detail, right? And the proof of the pudding is in the eating. Devil in the detail means that unless you scratch the surface, I mean, who know it better than us in terms of devil in the detail? Because you never know what is wrapped inside that. When we do due diligence, for example, a sell side or buy side due diligence, and we go deep into receivables, asset valuation, receivables, payables, and things like that. There's so many things which are when the invoices are overvalued, the purchase are undervalued, the assets are not. There's no asset. I mean, the assets are not. The asset value is they have not included all this is because the asset fixed asset register was not updated in time, right? So unless you get deeper into things, you will not be able to detect the devil. And then proof of the pudding is the eating. This, what I mean by saying is that unless, as consultants, as chartered accountants, as professionals, what you suggest is not implemented and sustained, there's no fun. An internal audit or a consultant making a recommendation which is not implementable, what's the point? So the proof is always proof of the pudding is always in the eating. With that, we come to the end of this session. There are certain there was some lines which I wrote some time back in terms of summarizing this entire thought process in the form of a शेर or a कविता, right? So अगर उसको उर्दू में बोलते हैं तो क्या बोलेंगे भाई कि मुल्क के निजाम का एहतराम होना चाहिए, आवाम की परेशानियों का इंतजाम होना चाहिए, मुल्क की तरक्की के लिए ए मोहतरम सब तरफ अमन और अमान होना चाहिए. व्हाट दैट एग्जैक्टली इट मींस. देश की व्यवस्था का सम्मान होना चाहिए, प्रजा के दुखों का समाधान होना चाहिए, देश की प्रगति के लिए श्रीमान चहु और शांति और प्रेम होना चाहिए. नाउ लुक एट इट दिस वे. बांग्लादेश इज अ केस इन पॉइंट. बिफोर Sheikh Hasina's government was toppled, there was peace, tranquility, and law-abiding citizens, and the GDP of the GDP growth of Bangladesh was almost equal to India, even better. The value of taka was much better than that of Pakistan. Today, where Bangladesh stands, purely because मुल्क के निजाम का एहतराम नहीं है, which means the व्यवस्था जो है देश में वो उसका सम्मान नहीं हो रहा है. The law of the land is not respected. The polity, the citizens of that country are facing such upheavals, right? And so the growth of the country is vanished. On the other hand, in our country, we have been having political stability for a long time. Law enforcement has improved, right? People's problems are addressed in whatever way. I'm not saying that problems are all problems are addressed. Problems are still there, but that is because of that stability, our country is showing 7% growth, isn't it? So that is what good governance, right? What our Prime Minister has been saying. Minimum government, maximum governance. That's what he has been saying at many forums, right? So that is how good governance, addressing people's problems. Now this can be applied to an organization also. If the organization's governance, rules, regulations are properly implemented and respected, the employees of the organization are taken care of in terms of their financial and non-financial needs, right? Then, and there is peace and tranquility in terms of the work atmosphere, the company is bound to grow, right? But having said that, if it's just the reverse, there's always a firefighting situation, there's always bickering happening, there's always firefighting happening, there's always parcel passing happening in terms of responsibilities, accountabilities. You think the organization will progress? It won't. So that's precisely what I was trying to say. कि देश की व्यवस्था का देश या कंपनी, आप जैसे भी आप परिवार जो भी बोले, कि व्यवस्था का सम्मान होना चाहिए, प्रजा के दुखों का समाधान होना चाहिए, देश की प्रगति के लिए श्रीमान चहुर शांति और प्रेम होना चाहिए. With that, we end this session. We are open to questions. Thank you. Over to you, Maitri.
Yes, so people, if there are any questions, please put it in a chat box or a Q&A box, and I'll read it out.
I was just looking at the chat box. Uh, I have, as of now, there are no questions.
Yes, there are no questions.
Yeah, but
So I
there was one gentleman, Anil, who was a bit upset on not starting in time.
that was, I think, before the technical glitch happened, no, not
No,
after.
but
I
then, but
had
then, but then, your point is well taken, sir.
yes. Okay. I think, sir, you have explained everything so well that there are no questions from people.
Uh-huh. Okay. Oh, I would like to believe that maybe.
Yes, yes, we should take it as that since there are no questions.
Okay,
Okay, so I'll call over, CA Vratika Jain
sure.
to extend a vote of thanks to our speaker.
All right.
Vratika, are you there? Looks like there's some issue.
Uh,
Uh, I will take over.
uh,
Sir, this was a wonderful session, especially when you ended with very great this. I would like to, listen to your this first. Okay, Sir Anil ji has replied saying your presentation compensated for the delayed start.
oh, thank you very much.
Yes. Okay. All right. So it just goes on to show that it was a such a great, well thought out presentation. It covered everything, right from the whole flow was very nice, and I just would, personally, I would just love to see listen to your poems because the way you, uh, the command of your language is amazing.
Thank you very much.
So,
Thank
so on behalf of WIRC and everybody who's present here, I would like to, present a vote of thanks. Thank you very much, sir, for taking out time and giving us your this. The session was very insightful, and I think the comments are now coming up with. Okay, there is one question now.
you.
I think we are just not following this, but yes, let me read out the question.
Uh,
How the non-compliance of GRC in government departments will affect the GRC implementation in private sector?
well, non-compliance of GRC in government departments. Sushilji, you can speak up. What exactly do you mean by GRC, non-compliance of GRC in government departments? Can you help me understand that? Or maybe what you mean is that if the government departments are not behaving, then how will they ensure implementation in GRC sector? Is that what you mean?
Possibly that's what he means.
Uh,
Suresh, you can type out, or maybe I can ask Vaibhav if you are here. Can you offer him a chance to speak up?
yeah, I mean, you can unmute the participants at this
Yes,
moment.
you can give them a chance to speak. Suresh, if you can unmute Suresh.
Yeah, yeah. I mean, at this stage, everybody should be unmuted, actually.
No, so basically this is a webinar format, so we will have to
Uh,
specifically give them a chance to speak or
yeah,
enable the
exactly.
mic.
Mm.
Vaibhav, are you here? Okay, so meanwhile, there's one more question. Some practical examples of how vision statement can make a difference and any unique vision statement you have come across.
Okay. Unique vision statement. A desktop on every table. Microsoft. That's how they started. So the vision mission is hardware oriented. A desktop on every table. They made sure they created such softwares that there is actually a desktop on every table nowadays, isn't it?
Yes, it is. It is.
So that's how a vision mission works. But having said that, it can only work when the vision is percolated down the line in terms of the workers of the organization, and they identify with it. There's a concept called goal congruence. Individual goals and organization goals should have congruence or similarity with each other. They should be complementing each other. It cannot be that organization is progressing and people are not progressing, or people is progressing, organization is not progressing. So unless that blending happens, only then an organization progresses. And that can be achieved by a clearly defined vision statement. I hope that answers the question.
Right. So, any unique vision statement that you've come across?
Uh, there are plethora of them. Yeah.
Okay, all right.
Can't recall anything out of the hat. I mean, if somebody can flash something on the screen, then maybe okay, not a vision statement. I'll give you an example. You have those billboards of the companies, right?
Right.
ISO 9000 compliant, right?
Mm-hmm.
Right. So the
Yes.
ISO 9001 compliant. So there are two views to have to that. What you want to have now. This is a question of tone at the top also. What you want to do with the organization? Have a big neon sign saying I'm ISO 9000 compliant and actual compliance is zero, or I just have a simple board outside my factory ISO 9000 compliant and actually the ISO 9000 compliant to the T.
Right.
So it's all about your kind of the way you approach things and it is another factor, and the factor is I would explain it by saying that there are three types of people. There are managers, they are leaders, and they are visionaries.
Visionaries. Yes.
Right. So respected Ratan Tata was a visionary, right? Elon
Yes.
Musk is a visionary, right? Then Steve Jobs was a visionary. Sam Altman, all these guys, and Dhirubhai Ambani was a visionary, right? Aditya Vikram Birla, all these guys are visionaries. They have created huge organizations, yeah. But there's another guy who just believes in all the success is mine and the failure belongs to the subordinates, right? Now,
Mm.
in that situation, what do you expect? Will you
True.
be able to take the people along? Or say, for example, Richard Branson of Virgin Atlantic.
Mm.
The kind of camaraderie he shares with his, I mean, he would go anywhere. He will he will put on the uniform of a flight attendant and start serving his airplane. Or the great JRD Tata has seen many times been, he found out cleaning the toilet of an airline. Yeah, these are
Yes.
corporate folklores. That is how the leadership values and demonstrations happen.
Absolutely. So that's what you meant by saying it's a top-down thing, where
Absolutely,
it
absolutely. Say, for example, the leaders of the country, what is happening in the United States, what is happening before the elections, what is happening today, just because of the change of a leader,
true.
right? So there's a lot to it. There's a lot to it. But having said that, the fundamentals don't change. The fundamental human value system don't change.
True. And then that's how it reflects on the company, right? And that's how it comes down. So even if, a vision mission, usually what we see is
Hmm.
that, it's very idealistic, all the vision mission statement. But what is
Yes.
actually happening in the company does not match with it. So
Yes.
so that's where, confusion comes in.
Hmm.
Uh,
There are three things. One is parivar, parivesh, or pathshala.
Pathshala.
These are the three things which create everything.
आपने ये भी बताया था चरित्र एंड भाव
चरित्र, संस्कार, आचरण, भाव,
आचरण
व्यवहार
और व्यवहार
और
yes.
प्रवृत्ति.
Bang on, because it perfectly matches the kind of vision mission we would like to ideally
Yes.
implement.
Correct.
Yes.
Correct. Yes.
So yes, I think Suresh ji has not come back with the rejoinder of the question that you'd asked him. So Suresh ji, do you still want to come up with this? Exactly what would you mean by government department non-compliance in government department? How will it affect GRC implementation in
See,
private sector?
I would take a shot at it. What actually he means is that government departments has largely been very slack in their, for example, and there are islands. For example, in the last 2014 onwards, there has been some some sense which has prevailed at the top. Like if you go to the top ministries and things like that, there a lot of governance has improved at the IAS officer level and all that. But
Right.
still, if you go to a municipality in Mathura, right, or municipality in say for example a small city in Maharashtra or anywhere in Bihar, it's still the same thing. You still struggle, right? So a small time trader in a small city might not be that compliant, but a corporate who's dealing with the government would be more compliant. So it is a complicated question. There would be many colors which would be existing at any given moment of time. What matters is that how skewed it is towards the positive. Like largely there is a good governance, but there are islands of bad things, or there are largely bad governance, but there are islands of good things.
Possible. So one more, example comes to mind. What really happens in a top-down approach? We have government stating that we want corruption-free this. They have come up with a lot of online initiatives.
Right.
So maybe the values are in place, but what really happens when it trickles down to grassroots level is that really possibly it's not so. You still have people calling you and asking for things. So maybe that is what he means by the
Yeah. Let's see. Now
governance.
at that point, like say everything the prime minister of the country or the leader of the country cannot do. Right.
Exactly.
It's both ways. So at that point where there is overall good governance, but somebody is again asking you, but still asking you for a bribe or a greasing his palm or something. So that basically is a fault of his parivar parivesh and pathshala.
Hmm. So yes, everything is supposed to be online, but still you get a call. So I guess that's what
Uh-huh.
he probably meant, that governance is not in place over here in government.
Yeah.
How will it trickle down to?
And another thing is there is a very large example I'll give before I go.
Hmm.
See, you have I don't know how many of you would understand them. It's called Devasur Sangram. देवता और असुरों में संग्राम
Yes.
होता है या
Yes.
लड़ाई होती है, right?
Hmm.
This Devasur Sangram has happened in every yuga.
Absolutely.
You
Yes.
have Dev,
True.
you have Asur, you have it in all times. In
All
Sati Yuga, you
times.
have Prahlad and Hiranyakashipu, right?
Hmm.
Then you have Ram and Raman. Then you have Krishna
Yes.
and Kansa. Then you have Kaurav Pandav. And today you have good or bad inside you.
Inside you.
So that fight always goes on. The differentiator is what kind of king you have. Yatha Raja Tatha Praja.
Tatha Praja. Absolutely. Absolutely. So
So
makes sense.
that is also part of governance, in fact.
Part of governance. Yes. So, Piyush ji, I really enjoyed the discussion part that happened later. So,
Yeah.
again, I'd like to, extend the vote of thanks. I'll still ask, Vratika, are you still there? Are you here?
Yes, I'm here.
Okay, please. So, I tried to call you out. You were not there, so I extended one
No,
part
no,
of vote
actually,
of
I
thanks.
was there only, but you then started interacting with Piyush, so I just don't want to
Great,
interfere
great,
Arre,
great.
great,
as
great.
well.
Good, 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 Vartika. Yeah.
Yeah.
Please, please, please
Please
go
go
ahead.
ahead.
So, good evening, everyone. It's an absolute honor for me to have the opportunity to extend a heartfelt vote of thanks on behalf of WIRC, and a special thanks to Piyush sir. His insightful words and valuable knowledge enlightened us today, and sir, this session was really very good. And the last interaction between you and Metri was really very good, and this has given us a good, insightful meaning of good and bad thing about mission, vision. And the thing which you have mentioned regarding that, like in my company as well, also I have, placed few mission activities, few vision. But to, achieve that, there has to be a focus, should be there. So of course, this seminar will help me a lot in implementing these things in my company as well. So thank you so much, and thanks audience as well for their
Thank you.
participation. Was really grateful to us.
Thank you. Thank you very much.